With the stock market and the housing market at record levels all around the world, and interest rates at record lows, inflation is something which has pretty much all investors worried. Some people are reacting to the modern inflationary environment by purchasing traditional hedging assets like gold and silver, and other commodities which are limited in supply and have high extraction costs, and which will likely preserve their real value a lot better than dollars will over the coming years. And then others are buying up real estate and good companies with the ability to raise prices in line with inflation. Companies like Gillette and Coca-Cola, which have the types of loyal customer bases which enable them to be price makers and to raise their prices with inflation, something which a lot of companies do not have. But the major problem with these assets is that everybody has either already bought or is buying them, and conversely very few people are actually selling. In other words, the markets are already priced with inflation in mind, and the market prices of these types of hedging assets already in many cases reflect a highly inflationary environment. But one area which a lot of people are overlooking is crypto. The prices of cryptocurrencies have also risen a lot over the last year. But the thing is, this isn't just an isolated price appreciation. The underlying blockchain technology and crypto adoption is also growing at a rapid pace as well. And if we look at the earning power of many of the income-producing cryptos, the staking dividends have increased in line or roughly in line with the market prices. And so from an income-based perspective, many cryptos are still in real terms producing a very similar dividend to a year or two ago. Whereas in other markets like stocks and real estate, the earning power of properties and companies hasn't really changed that much at all, while at the same time prices have risen a lot, giving way to a huge reduction in available yields. And one way to profit from the inflation that we are seeing in the supply of dollars, which may well turn into stagflation, a situation where economic growth is low or even negative while inflation rages, or even hyperinflation, is actually to find crypto projects with the ability to preserve their real value through a limited supply, and actually to grow by producing a staking dividend which can be reinvested over time. When we are buying a cryptocurrency, we are doing two main things. Number one is that we are placing a bet on the future growth and adoption of that crypto or the platform. But we are also placing a bet against the value of the dollar or whichever currency is being used to buy that crypto. Because in effect I am selling those dollars in exchange for a crypto which I think will have a better investment performance than dollars will. And to be honest, the Federal Reserve is doing most of the work for me. If I'm swapping dollars which I know will be inflated for a crypto with a fixed supply, so long as that crypto has a healthy amount of genuine demand and is not entirely or even substantially based upon speculation, it's clear that the real value of that crypto will perform better over time, and this is compounded if the crypto produces a staking dividend as well. And you may be thinking that stocks and real estate can also do the same thing, and they can, and I think that every investor should be well diversified, but to be honest, what will happen to those markets if the Federal Reserve and other central banks are forced to raise interest rates to 4 or 5%? The chances are they won't do it voluntarily, but if this trend of inflation continues and even intensifies, which is a likely possibility, they may be forced to raise rates or face a completely worthless currency. And if rates are raised to even 4 or 5%, it's nearly certain that the stock market and the real estate market will incur a deep and long-lasting crash. Just think about all of the people with variable rate mortgages and all of the investors who have leveraged up to the sky, and what would happen to those people if interest rates doubled overnight. And that's why in my view crypto is a good hedge against the dollar, and one which provides a hedge against rising interest rates as well. And don't get me wrong, I'm not saying that real estate or stocks are poor investments at all, but people should be aware that interest rates may be forced to rise, and that could lead to a lost decade or two in those markets. Whereas crypto itself is actually a hedge against the financial establishment, and while crypto is still affected by interest rates, the level of severity is not nearly as high. Anyway, that's all for this video. If you enjoyed and you'd like to see more content like this, be sure to subscribe to the channel, and thanks for watching.